Wednesday, November 12th, market analysis, Stan Ehrlich. Well, we have another day sort of up. Basically, it didn't go anywhere. We do have a higher high, but it's only for the last couple of days and not for the whole trend on the MES and ES. And we'll look at the spider in a moment. You guys know I start out with indexes and go to futures and then some stocks. So back to the indexes. I still believe this market is in the process of rolling over and will break the low of last Friday. That's the more current important low. Closing below that, maybe on the same day, it'll close below the October 10th low. That low, October 10th, turns things fairly significantly bearish for weeks, if not months. And I do think there's a chance that will happen. And this is the 5-minute chart. Started rolling over a little bit later in the day. Nothing major so far. Spider has a gap to close under the market from the high of Friday to the low of Monday. Have a different horizontal support level showing. The gap is in that support level. That implies we're going to come down into the support area to close the gap at a minimum. But if it keeps on going, you're already getting into the low day, which was again last Friday, November 7th. Breaking below that low, that line should start it to challenge the October 10th low, which is not that much farther. Below that, things get significantly serious bearish. Next, breaking down just a little bit, not much. I don't have a lot to go on bearishly as far as past tense bearish price action. We closed after making a minor new high for a couple of days, strong on the QQQ. Well, actually, basically unchanged. And I might add the low for the last 3 days, all of this week, Monday, Tuesday, and Wednesday, has almost been the same. So dropping below Monday's low, which is almost Tuesday's low, which is a tiny bit lower than today's low, we'll start to close the gap, and then we'll see what happens about challenging last Friday's low. Again, below that, we've got October 10th. Below that, watch out. Next, sideways. Next, NQ. Same as the QQQ, basically. No real major changes, except there's no gap below the market because it's a 23 out of 24-hour market. And the 5-minute data chart. YM. New historic highs. New historic high close. The close is also above all previous historic highs. Normally, this is very, very bullish. I hate to say that's still possible because everything else tells me no, including we got overbought today for the first time in a couple of weeks. And this could turn itself into a double top. Suppose it never makes a higher high than today's high, opens steady, and then drops down and keeps on coming. That will look like a double top. Next, YM, 5-minute chart. Nothing bearish about it, really. And now the Russell, still stuck in this broad trading range, support and resistance zone since August. It's a multi-year resistance zone and support. So I am looking, for a little bit of a dip down to 2383 and then maybe lower. That would be the October lows, October 10th lows. And here we are with bonds. Slightly higher on the close, slightly higher high. I do think it's going to roll over and come back down. I'm looking for a test of 115.24, a little under 116. Notes, barely made a higher high by a tick or something. Slightly lower close. I don't know, same opinion. Looking for a test of this bull trend line, which is just a little bit below support area. And by the time the market gets down there just in a few days, they both could be the same. That would be on the 18th. Well, we'll see. Crude, new low close. longer-term trend starting to perpetuate itself. It's resistance area above the market I've been talking about for weeks. Stopped a couple of different rallies. Well, basically all of them, except for one or two closes just a little bit above it, and they didn't hold. So bearish, new lows expected, challenge of 55, call it 56 flat and lower. Next, natural gas, overbought second day in a row. No upside progress, a little lower close. Could be turning around. We get below, especially if we close below yesterday's low, which will be a new low probably for a couple of days earlier than that as well. They're all close together. Will probably do the trick. It is a support level, and if you close below that, yep, it's probably going to turn down. Again, overbought. I don't think the long-term trend has changed. Heating oil, almost a bearish ER sell signal. Possible broad double top here. This double top would be over a high in June, and here we are in November. Yes, you'd have to get all the way down to 2.09 just in order to break out of this broad pattern. But if you did, then the downside objective would be in the ballpark of the lows way back in, I'll say basically April 9th of this year. This could turn out to be super bearish. Can't say that at the moment, but I do think we've got a new low close for the last 4 days in overbought conditions that got pretty darn high on the scale. I talked about this yesterday, I believe. 84 is not to be ignored. Next, higher high, higher close, not overbought. Could go up a little bit more in gold, then get overbought and turn down. I don't know that the major trend is changing or not. I'm not sure. The next move down, we've got to start to make lower lows, of course. Maybe in the next couple of days, it should turn down. Next, from a little higher, silver. Now it's overbought, and we're right up against the previous top, almost exactly. This is a classic example of a possible double top. Your lowest low between the two highs are 45, 45 basically. And as a result, you measure from the average of the two highs to the lowest low, and then you take that measurement and you go down below the low of the lowest low, and you get your downside objective. But just eyeballing this real quick, looks like it's going to be in the ballpark of a little below 40. Next, platinum, new high close. Looks fairly good. Nowhere near overbought yet at 64. So I guess it could work its way up a little bit more. But I'm not sure about the longer term. Slightly bullish platinum momentarily, maybe a couple of days, maybe 1700. Next, high-grade copper. New high, couldn't hold it, dropped back below previous highs, almost closed lower. It is a doji, it is a engulfing, a bullish engulfing. Normally, I'd be very bullish about that. I think there's now a chance it could come up to the same levels it came up twice before, challenging 5.25. But it could triple top out. That's definite significant resistance. I'll put a line in there for you. Starting right there, going sideways. Boink, that's it. So watch it as if it can get there in the first place. I'm still basically looking for a big move down. Next, soybeans and grains in general. This is almost a new high and almost a new high close in soybeans. I'm bullish, intermediate, long-term, and short-term. Now, we're not overbought, so I am expecting it to pop a new high ground pretty quickly. We have already cleared major important highs for the last year, going back to August, actually going back to September of 24, more than about a year and a half. Held on downside corrections, and now about to make new highs again. There's nothing really stopping it until you get to about 1157, and I don't think that's going to stop it at all. This is a 1.5 year bottom. I've been talking about a long-term bottom in grains for many months. Soybean oil had a higher high today, but a lower close, and that's a bearish bearish engulfing. So it implies we're going to dip back down. That's okay as long as this previous bear trend line, the top of a downward sliding channel, holds, and we bounce off of it or don't even get to it and make new highs pretty soon. Meal up today, killing yesterday's bearish engulfing. Good. Didn't want to work in the first place. Remember, I'm intermediate, longer term bullish on all the grains. It depends on the short term picture as to whether it get ups and downs and bumps and grinds during the longer term, intermediate, and longer term bull trend. There are, short term, they're always there. I like it. Looking for new highs pretty soon. Corn. Another strong up day. Oh, this looks like it might be a new high close by a fraction. Maybe not. But we're right smack dab up against resistance for the last 2-3 weeks. Tomorrow, I think it's going to push through, pop up probably well above 440, maybe even 445 to 450. Looking real good. Lopsided head and shoulder bottom, double shoulder on the right, only a single on the left. That's lopsided, not symmetrical. And the last two shoulders were about a month late, timing wise. That's not symmetrical either. Nevertheless, the body parts are there, and it is working. Next, wheat. Support tested last 4 days, 3 of them were about the same levels. Closed steady to a hair higher. I'm looking for this to start to make new highs soon. There is a gap to close down here. I'm not going to ignore that at 515 a quarter. But it looks like it's going to not do it right now. Next. Apple's overbought second day in a row. Can't get into the new historical high ground. Coming close and dipping down a little bit today. No big deal. Doji. Still looking at this as a possible double top, but it's too early to say. Neutral momentarily, but I have to point out there's a gap to close down at 264-ish and another gap to close at 253. And if the stock indexes start to head south, Apple could come down a lot more. Next, Tesla. Same kind of commentary. Coming down a bit to support. No breakouts. Large trading range. Possible double top if the double top comes true. And we break below 411 and a third on a close, we'll have a downside objective of 455-ish and lower maybe. Next, gap to close is partially closed yesterday and today. Needs to come down a little bit more. Then we'll see if it holds or not. But we do have overbought conditions at a top with a bullish and an exhaustion upside gap, as well as a small downside breakaway gap from a little tiny 4-day, very small double top in overbought conditions. Looking for the gap to get closed, 138, then looking for a move to test 178.80. And if that's broken, then we'll see how well it holds these other major support areas. Next, AMD, not quite a new high. Strong close, gapped up, small gap from yesterday's high. And I'll do this right now. There we go. Okay, from yesterday's high right there. Very small, not very big. There it is. So, an earlier gap had been closed on the way down. That's done. And jumped right back up again today. And that gap was closed just simply yesterday at yesterday's lows. Very good example of a gap closure. So here's another one, unfortunately. This is going to be a problem. We could have some, pretty bearish price action soon. Next, you guys have a great day and profitable trading to you.